We'll be starting in 1 minute. So Catalin said, what is the YouTube? What is the YouTube, Dwight? Just put it in there and I'll...
Yeah, I'll put that in the chat.
Check it out also. All right. Welcome to the webinar. Welcome to the second day of the 4-day trade execution webinar series. This is a live event, so this is real. I've subtitled this How to Capitalize on Monster Moves in the Markets. My name again is Mark Shawson, the Pattern Trader. So welcome back. So yesterday we talked about sorry, I'm trying to, I'm going to get this link and just download this into the chat box also. So yesterday we watched a video, if you were here, on price action, how everything that I do is predicated exclusively on price and patterns. Now I've included a PDF workbook in the chat box for this webinar. You can download that. It's kind of a review of yesterday's video where I kind of outlined the major patterns that I look at, the major price action to make and determine moves in the markets. And every day I share with you my my trades. So I'm heavily short and overly short right now. Not really feeling too comfortable. I'm short 2,800 shares of Tesla. That position's worth 2.2 million. I'm short 4,000 shares of CGen, SGEN, and short 5,500 shares of Airbnb. And these stocks closed a hair against me. My Tesla position, I'm well into profit, although it came back on me today. I actually averaged in. I actually sold even more short positions, which I'm not feeling terrific about. It's a great deal of risk going into a meeting tomorrow. So this was my average prices yesterday, around $844. In Tesla, and it closed around $800 today. So I'm still making money, but it went up about $35 today. So I showed you, how I've been calling the top in Tesla for a while, and how I basically outlined my strategies for currency pairs like the pound New Zealand, where in this particular email I was telling our members to buy it. And made some good banks. So I'll just kind of go through some of the trades I didn't show yesterday. So in this particular day, I bought these JD call options. I bought them at $1.25, and I blew them out at $4.25. So sometimes with options, you can make huge amounts of money. And I just basically use options as a way of betting on what I think is going to happen in the underlying. This was a particular play where I bought the puts in QuantumScape and, made about 54 grand in that. And, so just some of the trades in this particular trade setup going back January of 2021, a year ago, right at the top, I was, determining that gold had topped out and was likely to go lower. I was advising our members to sell gold at 1867 with a target objective of 1,700. I actually added to that trade at 1797. You can see it was midway between this ascending broadening price pattern And, I had an objective about 1700 and it went to about 1670. I got out at 1687 and made a whole bunch of dough on that trade. So again, I look at everything through the prism of price patterns and price action. This is actually my live program, my live broker platform right now. These are live, prices. So you can see Tesla closed about 801, 89, and in the aftermarket, it's down about $2 or $3. And tomorrow, so I'm trying to collect my thoughts here because, I almost don't advise trading, in the next couple of days because it's likely to be so unpredictable and volatile by virtue of tomorrow's Fed meeting. So for those of you who don't know, tomorrow, Wednesday at 2 p.m. Eastern time, the Fed will announce its intentions on interest rates. Now, Jerome Powell already, projected his punch. He already said that he was going to raise 25 basis points, a quarter of a point. So that's pretty much baked in the cake, and that's what we'll likely hear at 2 o'clock. But it'll be the press conference after that, about a half hour after that, where he's going to be grilled on, the runoff in the balance sheet, the, prospects for inflation, the prospects for recession, and all kinds of things. And it'll be those statements that the markets will be trying to interpret, on a forward-looking basis as to, where things go from here. How much does the Fed intend to ratchet up interest rates from here? And so it's likely, these kind of days are just very, very volatile. But to my mind, irrespective of what's going on with the Fed, with inflation, with Ukraine, trading is all about risk and reward. And so today I'm going to talk, mostly about, risk management. So to me, it all comes down to, understanding the risk in a trade and what's happening, externally to that really doesn't matter. So I'm kind of looking at PayPal in a funny way. I think that there's probably a little bit of a risk reward on the upside. You could find a little bounce out of this thing, but the markets are at a very turbulent stage. They've come off a lot. They're showing bear price patterns, but you can see they're right in this support area. And the thing about the market is that, or the market recently is that it's been, pretty much going lower, but you've had these huge short covering rallies where you can see, in this particular day, the index went up 7% in a day. So this is the triple Qs, which is a proxy for the NASDAQ. And literally it went from 317 to 340 in one day. It was a 7.5% move in one day. And so this is, the excitement and the difficulty of trading right now where, I've been shorting a lot of markets beginning last February. So over a year ago, I was telling our members that there was likely going to be a crash in what I call the second tier of the NASDAQ. So for the first tier, we call these the FANG stocks, the Facebook, the Apple, the Amazon, the Netflix, and the Googles. And they were mainly holding the indexes higher, particularly Google, Facebook, and Apple. They've been holding these, indexes at an artificially high level so that everybody checked in with the indexes, thought the market was okay, but actually under the hood, there was all kinds of crashes, from stocks like PayPal that went from $320 to $99. And, on and on. We had DocuSign after two earnings calls, went down $100 on one day. You can see right here, DocuSign went down $100, and effectively this has dropped from $320 all the way to $76. And there have been all kinds of instances like this where, I was basically saying Beyond Meat, when it was a $200 stock, I said, this is going to $30. And basically we hit that objective this week. So you can see that basically went from $218 all the way to $35. And so there has been a crash already. There's been this huge discounting, the market is a forward-looking thing. And so the question is, where do we go from here? And, it's a little bit, difficult. And so it's got to be a case by case, kind of scenario where I look at both the patterns and the price action. So on one hand, I see this is the chart for the triple Qs. So it's a little bit nuanced discussion. Sometimes I don't quite know how to explain certainly everything on a webinar like this, where there's a lot of people who, new to trading and what have you. So, I look at everything from a pattern and a trend basis. When I open up a chart, I go, well, what's going on here? And, in this particular instant, the market was clearly in an uptrend. And then we saw a pattern that then indicated that it was going to go lower. So you see this double top here, and once it crashed, it did send this lower. Now the question is, has that pattern done its job? Meaning, have we had the sell-off, and are we, ready to resume back higher? And so I look at combinations of patterns where, this could be an area where we could call this a double bottom. And then I also look at how something behaves, what I call the price action, where in this case, you made a new low, close on the high, made a new low. And we'll have to see, this is a weekly chart, which means that, we'll only see how this closes on Friday. But, irrespective of that, I think that these are just, what I call dead cat bounces in a bear market. So you have all these bounces, and we could have another one. But to me, it's just, a sawtooth lower, where every rally is then met by new selling. And so every day, I watch on the screen, these traders are talking about, is this a bottom? Is this a tradable bottom? And it certainly could be. We are in an area where there is, formidable support. Wherever the market kind of goes to these areas and revisits them, there, could be more support. But to my mind, this is still a very negative looking chart. And, we're likely to see more resistance in selling. So tomorrow, everybody's going to be queuing on what the Fed says. But what I'm looking at is this, double top, and then this head and shoulders, which looks just like a man or woman's head and shoulders, where it looks, that would be the left shoulder, that would be the peak, and that would be the right shoulder. Now, again, it's very nuanced. So once I see a pattern, then I basically, let me just draw this a little bit better. So this looks just, again, like a man or woman's left shoulder. The peak is the right shoulder, the head, and this would be the right shoulder. And then you have a kind of a downward sloping neckline. So when we see these patterns, then we look to see how the market behaves within these patterns. So now, if my expectation is that this is a head and shoulders pattern, this is typically a bear market signal. We're leading into this pattern, we see this thing, and then after that, the market goes lower. Now, the trick is, and it took me decades to kind of figure all this out, is that I used to see these patterns in a textbook, just like I sent you now. I sent you this PDF thing, and you'll see all of these patterns, and you go, wow, you'll look at that and go, yeah, that looks easy. I'll see this pattern, and when I recognize it in the market, the thing is, what I've learned to understand is that once I see the patterns, then I defer to the market as to what it's going to do. So if my expectation is that the market is going to do that, but the market starts doing that, then there's something wrong. That means, so then the market can actually start what's called busting the pattern. It can start busting the implications of this pattern. And again, I'm very conflicted how to go off in the weeds and explain all this very nuanced thing, but we are at a huge inflection point in all kinds of things. I mean, this is the first time we're seeing north of 7% inflation since the 1970s. And because of the Ukraine thing, we could be looking at double-digit inflation. And now the Fed, has to tread softly because of all of this thing, and they're behind the curve. And so there is so much going on in terms of the markets and in terms of, exactly where we're at. So instead of trying to determine, what the Fed's going to do and what all that means, I simply am going to look at how the market behaves within the context of these patterns. So this is a bear pattern, and my expectation is that we should continue going lower. But what I think and what I expect doesn't matter. If the market, starts closing higher and start going higher and starts disrespecting that, then that would indicate, something else. And so what I do is basically draw my structure like you're seeing here, and then observe how the market plays within these boundaries. So it's going to be, interesting. And again, this is a weekly chart, which means what I look at to see how the market closes relative to the high and low. So you can see that slash mark is where it closed today, but where it closes on Friday is going to be where it's important to me. So if we end up on Friday and, this bar, looks like this, and it's a very strong bar, and we close on the high, right in this, potential double bottom area, and then we start levitating, I will kind of look at it one way. On the other hand, if by Friday, and it could be after tomorrow, we start looking like we're trading down here. Sorry, let me just. Sorry, it's been a long day, and I'm trying to collect my thoughts and try and explain things in a way that. So if we close down there, it's going to be very different looking. So to me, how something closes relative to the high and low is very, very critical. Whether you're looking at a daily chart, a weekly chart, a monthly chart, how something closes relative to the high and low. For instance, when I saw that this closed on the low of the week after going higher, to my mind, that indicated that we were going to have another piece of this downtrend. Now, the trick is you can't trade all of these reversals in a vacuum. Just because you see what I call this key reversal, where it makes a new low, close on the high, you can't just trade that in a vacuum saying that, okay, we made a key reversal here, and so we're going straight up. I still think that this thing looks like a very difficult chart and that we're still going lower. Now, it's very conceivable that, we bump the, upside of this downsloping neckline. We could go all the way back to 340 and still be in a bear market. And so that is the nature of these bear markets, is that, for instance, like today, there was not a downtick. And that's pretty much how these are short covering. They never let you out. Once you're locked in, they just go up and up and up and up. Tesla opened right on the low at 760 and just never had a downtick the whole day. And that's the thing about these short covering rallies. They look very convincing. And we could have another one where you get the Fed meeting and now it goes, and then you think, oh, it's green light, and then you're back in this chop. So to me, this still looks very negative, but we'll have to see how we close, and there's all kinds of considerations. But ultimately, when I look at a trade, I try and boil it down to a risk reward relationship. And I'm just trying to think of, a couple of trades that I'm looking at right now where I'm just trying to think what is representative. So here you see CrowdStrike, where there's all these lows. I'm trying to, so over the weekend, I put out an email. Here's what my email looked like. Where I talked about, I show, the gold and the NASDAQ, et cetera. So I was looking at the dollar yen. I told our members to buy the dollar yen at 117.27. And now that pair's 100 pips higher. It's trading over 118 right now. And I showed how it was breaking out on a long-term basis. But I talked about this stock Whirlpool, WHR. And typically, I advise, selling on a stop. In this case, I recommended, because of the size of the the bar last week, as well as the Federal Reserve. I said, given the extent of the recent sell-off in Wednesday's Fed meeting, I want to try and get short on a rally. So I recommended getting short at 189.5, and that was basically triggered today. And so whether this trade works out or not, this was my thinking. So this is the stock Whirlpool, and this is why, kind of makes me think that, we could be heading into an economic storm, because this is kind of a safe stock, a consumer stock, and it's showing signs of a very bearish price pattern. So we see in the near term here, this kind of head and shoulders. And then on the longer term, this whole thing to me looks like a double top, just like an M top. And effectively, we took out the neckline, and now this week we're basically retesting the breakout of that. This is what markets will do. And then I think that there's a good chance this will go lower. So I recommended to our members that they sell it at 189.5, which was triggered today. You can see we closed about 50 cents higher. And so right now, I am short that stock. So I'm just trying to find something that is representative. I think, again, this week, I'm very leery to, make recommendations because of the volatility, but in the end, it really shouldn't matter. So this is the stock of Coinbase. And this week we made an all-time new low in Coinbase. So again, it doesn't matter what chart I'm looking at. I look at, a series of price action, price patterns, and the phase or the direction of the market. So whenever I open up a chart, the first thing I say to myself is this thing going up or is it going down? And if I think had a 6-year-old sitting next to me and I said, is this thing going up or is it going down? I think that the trend is pretty apparent. So once I understand what the phase or the direction of a market is, I simply try and look for a place to join that particular trend. And so the trend is lower. And then I say to myself, well, is there a chart pattern that I can recognize that, also solidifies the fact that, this is something I want to get short. So here is this head and shoulders. This is just what we talked about in the triple Qs, where whenever you see these things, they are typically bearish. And I say typically because if the market, doesn't respect that, then that's one thing. But you can see that once this thing broke this neckline, which is simply a line drawn the pattern, then it went from 240 and it's now trading at 155. So you can see that these patterns, once they are in place, they have implications. And that's why I think the implications for the stock market are still very bearish, notwithstanding the fact that you get all this noise and these flurries, and a lot of things are oversold right now. But that doesn't mean you should just jump right in. So then once I see the phase or the direction, and then I see the pattern, then I look for a series of bars that then put me in the direction of that trade. So I call these bars my insurance day bars. In this case, this is a weekly chart, which means that each one of these price bars represents 1 week in time. And so I look at a combination of what I call the definition of an insurance day bar is either a key reversal or an inside bar. Now, a key reversal is basically what it sounds like during that day or the week, depending on the time frame. And remember, this is a weekly chart. I look at how it closes, and this little slash mark is representative of how it closes. So you can see in this particular week, hypothetical example, it went to a high, and by the end of the week, it closed closer to the low than it did the high, indicating that the sellers were in control, right? So once I understand what the direction is, and the pattern, then I just look for one of these bars to then join that trade. And you can see right here, it made a new high, it closed on the low. And then the fourth step of my plan is basically to put a sell order or a pending order right under that low. So whatever that weekly low is, I would just put my resting order right there. So in this particular example, which is not a hypothetical, this is exactly what happened in the market, was that you can see that the week into the next week, it opened higher. Now, that's the beauty of this pending or resting order. You don't have to be watching the screen. You don't have to look for some magic crossover. You can just let the market do its thing. And if it opens and continues going higher, guess what? Your pending order is not triggered, and no harm, no foul. You go look for another trade. But what happened was during this week, it opened higher, and maybe Monday, Tuesday, Wednesday, it kept going higher. And then all of a sudden it hit your order, and now you're into this trade. And so that was a key reversal that told me, where to join this trade. So once I understood the pattern and the trend, now this, what I call my insurance day bar. Why I call it insurance day bar is that it tells me where, I should get in to join the trade and where my risk should be. So once I understand how to get in and what my risk is, that to me is, the things that you can control. Where it's going to go, when it's going to go, how much is it going to go? That part we don't know. But if you can control your risk, that is really the holy grail of trading. Knowing when to get into a trade and how much risk. If you know those two parameters, that is really the holy grail of trading. So the other, what I call my insurance day bar, and I call these insurance day bars again because, I know where to get in and I know where my risk is. So the other definition of an insurance day bar is this inside bar, where literally the range from high to low sits within the range of high to low of the previous week or day, whatever time frame you're looking at. And so you can see right at the top here, this inside bar. So when I see these inside bars at the top or the bottom, what this tells me is that this market was going. And then in this week, it couldn't go anymore. And it started running out of steam, like kind of that acrobatic, kite airplane at an air show where it starts levitating and then runs out of steam and then goes the other way. And so to my mind, all you have to do is put a sell stop under there, put your stop loss there. This is your risk, and that's your reward. So you could have been short from 320, and this never got you out. And so the question is, now we're making new lows in Coinbase. So Coinbase is pretty much a proxy for crypto, which to me means that crypto is likely to keep going lower. It's not a perfect proxy, but I think it's fairly indicative. So for those of you in cryptos, I'd be careful. So now you see all kinds of other warning signs right here. Key reversal there, where it made a new high in this week, close on the low. Then you kind of had this double top where it made a new high, close on the low, and after that, you went a lot lower. And then you have this now triple top where you made a new high, close on the low. And so basically, I don't think you will ever see these highs again. I mean, that's a big statement, but I think, this thing just keeps going lower. So once we kind of understand the dynamics of what is going on in terms of the trend, the pattern, and then we look for certain bars, then we can, play with risk reward parameters. So today we had an inside day bar right at the bottom, but, this could be, a little bit tricky in here. But frankly, if you put a resting order under today's low, I mean, we could go higher tomorrow, probably will. So this is kind of, coiling. It's kind of getting very bunched up here. And so we could get, another rally back to, this breakout line and then back down. But so this is an area where there is some support, but I don't think it will hold. And so you kind of have this inside bar today. Today's range is inside the range of today. And so you could start playing with some risk and reward. So, so if you put your sell stop there and your stop loss there, that's how much risk you have. And you probably have endless reward. So, but, tomorrow is a day where you could come outside, the range, and then it could drop and do all kinds of things. But to my mind, if you had a pending order just to sell it under 150, a sell stop at, 149, even if the market goes up, then you're not put in there. But, tomorrow the market could go higher, break out, it all looks good, and then it could break back down, put you into the trade. And so, I look at these charts and I play around with all kinds of risk rewards, but the idea is to understand, where you are in the, so this is clearly a downtrend. Here is some intermediate bear price patterns where you see this, what I call an Eve and Adam double top, where you had kind of two, let me just make this a little clearer here. So you see there's two peaks here, there's one peak there effectively, and this is a kind of an intermediate. And so you can see you broke under there, you retested here, you broke, retested, and now you made new lows. And so you're likely to just keep going lower. And so, Coinbase is something that, I'm always looking to short and get in the direction of this trend. And again, I just use a combination of the price action and the patterns to get me in the flow of this trade. Now, there's another crypto proxy company out there called MicroStrategy. And I think that this is an equally fertile opportunity if you were looking to short something. It's called MSTR, MicroStrategy. And so, yeah, again, this is a combination where I see bear patterns, but I also see, some price action that, indicates there's support in here. So it's a bit tricky in here. Again, this is a very tricky week, and I'm searching for something that, is just a glaring call one way or the other. And, I do think that this thing is broken and will go a lot lower, MSTR. So again, I will just look for a day or a setup. So to me, this has just had all kinds of bear patterns. It's broken out of a descending triangle. And we're, really just playing at this area here. And this is likely to go and make a new low. So once I kind of understand that pattern, so you can see now I'm always going to be looking for a setup, a price action, a key reversal, an inside bar that's going to put me in the direction. And right now, you've got a kind of a key reversal the other way. But to me, today was likely a head fake. So today and tomorrow, you're likely to get a lot of different looks and head fakes where the market gives you a lot of looks and you're, trying to figure out which way is, the market wants to go. But this is where, you really need to be very objective, not watching the markets, not listening to the Fed. You need to be looking at, price action. So, because, this looks like a bottom, but the bigger trend is a big bad downtrend. And this is likely to keep going much lower. So I'm just going to be waiting for a particular bar or set of bars where I see an inside bar, something like this, and then I will look to, take it lower. So I think today's action was probably likely a fake out, but, I don't really advise that you anticipate whether it's a fake out or not. Let the market tell you. So, to my mind, this is the resistance in these patterns where I think it's very unlikely that you're going to get a sustainable rally that goes through, all of this. But if I'm wrong, believe me, I'll get on board this thing and go the other way. So again, I'm just looking for a trade. And today, I think you had a number of head fakes where a lot of these stocks are so oversold that they are likely to have some kind of bounce. And I still think the market is going to go a lot lower, but you can see like DocuSign. is in an area where, could it bounce, 10% from here? It could. And so this is why I'm kind of struggling, where I still think the market's going to go lower, but it's been so oversold. So this is Roku, where you see this thing is just straight down. And, at some point, could it have a 10 or 20% bounce? It absolutely could. So I still think the market's going to go lower, but that doesn't mean that you're not going to see all kinds of moves, where, this is a down, bear market and went up 60% in a week. So this is what you're seeing out there, is that these markets are coming down, but they're very treacherous if you don't know kind of where to kind of get in them and read the price action. So this is a stock called Upstart, and this was right where it had earnings. So it closed at about 100, and then 2 days later it was at 160. So this is a huge downtrend, and this looks like a blip on the radar right now. It's still back on the lows, but you can have these 60% rallies. And so while I think these markets are going lower, you can see how treacherous it can be if you don't understand how to get in and where the risk reward is in your favor. And right now you're having all of these little head fakes where it reaches a certain thing. It looks like it's, fertile for a bounce, but to me, these are just traps. So, I think I like to believe that I can identify the opportunities, but also where the traps are. And to me, this is like a trap where it looks like it's, pointing up. It looks like it's oversold. It looks like you should buy it, but I think that it won't lead to a sustainable rally. Instead, I think this is the real pattern in this downtrend. So the thing to do is understand the bigger picture. So most people are looking at short-term charts, 15-minute charts, 30-minute charts, and they don't see the big picture. Whereas to me, once you understand what's going on here, it doesn't look very conceivable that you can have a sustainable rally here. That's not to say that it's trading at 97, that this thing couldn't go to 120. And there will be trading rallies. And this is kind of really what I'm struggling with, where these markets are so oversold that, you could have a huge rally. The catalyst could be tomorrow. But to my mind, it won't be back too long before they go back into the trend. So when I look at Upstart, UPST, I'm looking at what I feel is the dominant or governing pattern. So you see that double top here with the tops don't have to be in the same place. One peak could be higher or lower. In this case, it's lower. But I think we can all agree it looks like the letter M. And then you have this funky head and shoulders. And basically, this whole bear pattern told you that this thing was going to go lower. From 240, this thing really got cut in half, or even more than that. So once we see these patterns, pattern to my mind equals trajectory. So really what I'm trying to do is always look for the pattern and then try and take a piece of the middle out of the trajectory that follows after the pattern. Now, sometimes it just gets messy where, the markets then get into kind of a dead zone where it's kind of a random back and forth. And so that's where we are with a lot of stocks right now where, we've made these huge moves. These things have been, shaved by 80%, some of them. And now we're just at these areas where maybe you get a bit of a trading rally here before it goes back. And so, the whole thing with trading is knowing when to hold them and knowing when to fold them. And I will take what I call counter trend rallies, where I feel like the market's put in a temporary bottom and it's going to go the other way. I will take those trades, notwithstanding the fact that I still think the bigger trend is lower. So maybe I should just talk about something that, I do feel very comfortable about. I talked about it in my report over the weekend. I've been telling our members to buy the dollar versus the yen for quite some time. And I think this is also a good instance to just show that you can analyze price action and price patterns on any instrument. It doesn't matter if it's corn, wheat, pork bellies, any particular trading instrument. So in this case, I'm trying to. This is the US dollar versus the Japanese yen. And actually for proceeding recently, I was basically selling every single rally until it broke out the other way. So dollar yen has been trading within this symmetrical triangle for many years. And you can see that it had this cadence of lower highs where every time it bounced, the bounce was lower than the last. And every time it would bounce, I would just short this thing. And frankly, I thought this was going to break out to the downside. And this is where, I'm saying that what I do is I draw these boundaries around these charts, and then I let the market tell me what it wants to do. So you can see that this basically had this cadence of lower highs. Every bounce was lower. And then right here, the cadence changed. You can see that it popped out of this, and now we had a higher high. And so right there, it started to alert me to a change in behavior. After 4 or 5 years of selling the rallies, now, I was saying to our members, this looks like it's broken out. And you can see it entered this very long consolidation and then continue to break out. So you can see it had this consolidation here. It had another long consolidation, and then it's broken out again. So I do think that this is going to continue, and we are likely to go right back to the highs and exceed the highs. So I do think this trend in dollar yen is, real as a heart attack. And so you can see there was a breakout from a symmetrical triangle. And then once I understood from a pattern perspective, what was going on and a trend, then I just look for all the ways to re-enter this market. Where, let me just put it on a smaller time frame so we can look at these price bars a little bit. So here again is, once we kind of understand what the pattern or the direction is. So once you say to yourself, okay, what is the pattern or the trend or the direction? Well, clearly it's an up. It's trading in this very defined channel. So now you just want to find ways that you can enter this trade where you can get in, join the momentum, and understand your risk. So you had a key reversal there where it made a new high, made a new low, close at the high. Those particular things, all I do is I put my sell stop, my buy stop there, above the weekly high or the daily high, or whatever, tools you want to use. Put your sell stop somewhere, your stop loss somewhere behind it, and then let the trend. Here it was an inside bar right there, where you could see that was an inside week bar where that range from high to low was inside the previous week. Prior to that, you had a key reversal. So you had a combination of a key reversal where you made a new low, close on the high. Then you had an inside bar. All you had to do is put your buy stop here and let the momentum put you in that trade. And so again, I just use a combination of patterns and price action to put me in the direction of the trade. So Vio says, what's your advice on leverage? So that kind of brings me to where I wanted to talk today, was about risk management. So you can see on this particular trade, I recommended getting in at the market. Typically, I recommend that you confirm it, but I was so confirmed that this was a breakout that I just said buy it around the market where it closed on Friday, which is around 117.30. And I recommended a 0.5% risk. I actually would have taken more risk on that. But typically, I recommend that most people take a 0.5% risk. So that means if you take 10 bad trades in a row, you've lost 5% of your account and you can recover. But what most people are doing is trading too big a risk on individual trades, or they're over trading. They're trading 3-5 times a day, maybe 1% risk a day. So you're taking 5-10% risk a day. And so in a bad week, you could be down 30 or 40%. And I think that probably sounds very familiar to a lot of people. So let me just actually come back to the parameters there. And, I put a very wide stop loss. And people say, well, I could never take this kind of stop loss. Look, this was really ridiculously wide. It was 250 pips or 240 pips. And, when I'm looking to get involved in a big trade, I like to give it wide latitude. That was kind of, a little bit too wide, but frankly, I didn't think there was a lot of risk in this thing. But, let's kind of examine, even if you had to take 240 pip risk on a trade, people say, well, I could never do that. Well, if you trade the normal size that you do, you couldn't. But this is exactly what it says. It's a position size calculator. I'm going to put the link in the chat box. And this will tell you exactly how to size your risk. So you can use this calculator in whatever major currency denomination, wherever you are in the world. For the sake of this, I'm just going to assume a US dollar account. I'll assume, a $2,500 account. And obviously you can play, with these and enter whatever your variables are. Then we come to this drop down menu and, we look for dollar yen right there. And we enter our risk ratio, where it ever says the risk in percentage. Remember, I was going to risk 0.5%. So that's expressed at 0.5. And then our stop loss was whatever it was, 240 pips. So most people associate pips with their risk. So they figure, look, if I'm taking a 15 pip risk on this trade, that sounds pretty small. But if you're risking whatever, 1% or 0.5%, and you're in and out 5 times a day, that's where the risk can go awry. So what I try and do is get in the bigger trades, try and stay in them longer, versus what most people are doing, where they're trying to, carve out 7 pips here or 12 pips there 5 times a day. And then they wonder why the brokers, got all their money in their pocket, because they charge you I can't even think anymore. They charge you a spread on the trade, right? 2 pips or 3 pips. So every time you're trading, there is an embedded cost, whether you realize it or not. So this calculator is a little bit funky. It says 1 lot equals 100,000 unit. That's like a normal thing. So most people are trading with, a micro lots or mini lots, which would be expressed as 0.1. And so you hit the calculate button, and this tells you that you could do 0.6 mini lots. And even if you lost 0.5% on a 240 pip loss, a massive loss, you would only lose $12.50 of your $2,500. So this is how to do risk reward calculation. So what I try and do is try and look for bigger trades in the market, something that's going to go 300 pips, 500 pips, 800 pips, 1,000 pips. If this goes from 118 to 126, you'll make 800 pips, versus trying to get in and out, many times a day, which is just frankly gambling. And so what I try and do is look at the bigger patterns, the bigger trends that then project into bigger moves, and try and take advantage of that. So I realize a little bit over the, all over the place today. It's, my mind is a little bit out there right now because of, all the things that are swimming around. So I'm just kind of looking at what's going on in the live markets right now. So again, tomorrow is going to be rock and roll. We're likely to see a lot of volatility, and I'm thinking that I want to actually diminish some of my risk in this Tesla trade. So I put in some extra trades today, and I'm thinking that so Sel says, is scalping gambling? It absolutely is. It's arbitrary. And, what I'm looking at is, sorry, I'm just have to enter a security code to get into my account here, is the bigger pattern. So what I've looked at is chart patterns. I'm just trying to determine if I want to get out of this Tesla trade. I'm just going to get out of some of them. I have a huge holding in Tesla, and I think I'm just going to cover this in the aftermarket. If you don't mind, just give me 1 minute. I sold short today, expecting there'd be some kind of sell-off, and there wasn't. And so at some point, it just becomes about risk management, right? You can think whatever you want, but at some point, it just becomes about risk management. And tomorrow, there's likely going to be a lot of risk. And so, let's see if I got out. I got out. So I just covered 1,000 shares of Tesla right here. And so Sell asked, is scalping gambling? So what I'm looking at, this is ARKK, is long-term charts. So in this case, this is a weekly chart, which gives me a global view of what's happening, versus a mini chart, where, if I look at Tesla on a 5-minute basis and try and, it's just gambling. This is just, when I look at this, I can't tell, if this is a double bottom, maybe, is this a double top? I can't see the forest for the trees. And so really what I'm trying to do is come out at a big level and understand what's going on. And so if you're trying to, get every micro move, first off, you're going to lose your objectivity. By trading so much, you start over trading, and over trading begets a certain behavioral pattern, and then it invites too much emotional pitfalls, right? So you get into this pattern of revenge trading, right? Where you make, then all of a sudden you fall in the ditch. Now you're trying to make it up and you fall more behind. So now you get more and more frenzied. Now you try and make it up. And now you've just dug yourself a big hole. And tell me if that sounds familiar to anybody. And I guarantee that everybody's been there, including me. And so how do you avoid that? So what I try and do, everyone's saying, well, what kind of time frame do you use? So I try and use a time frame, whatever that is, to inform me of what's going on. So if it's a daily and I can understand that, that's fine. If it's a weekly, even better. Really what I want to do is understand at a global view. So you can see that this is where it gets, very tricky, where, let's say we close, let me just make this a little bit. So sometimes the markets throws us two kind of looks. So what I'm talking about, on one hand, to my mind, as I discussed yesterday, I think we put in a big top in Tesla. A top meaning a top. But, this thing could still go, all the way back to 1,000 and still do that. So, despite the fact that, I think I understand where the top is, there's a whole big area between where the support is and, where the resistance is, and we could play, everywhere in the middle until then. And so, again, I look at a combination of the pattern and the price action. And what I want is price action supporting what I'm looking at. So if I'm looking at going short, then I'm looking for a price action that is going to support me. So you can see right here, there was a key reversal that week. We made a new high, closed on the low. And then in the following week, we did the same thing. We made a new high and closed on the low. So now I know that this is in a downtrend. I have a double top. And now I simply can put my sell stop in right under this bar, and it went all the way down there from 900 all the way to $670. And so again, this is how I use a combination of patterns and price action. But now you can see that even though I think there's a top here, here's a price action where we made a new low and closed on the high. And now we may be looking at doing the same thing, where depending on how this closes, we're making a new low. And, right now we're looking like we're on the high of the week, although this is only Tuesday. So by tomorrow, I think we'll understand a lot more what this thing will look like. But, I do think by the end of the week, this thing's likely to be a lot lower. I just don't feel like taking, the risk right here. So if we close there, it's going to look very different. So the answer is to trade less frequently and find places where the market gives you defined risk reward relationships. So you can see that we've broken under this long-term trend line, which, to me is the start of something pretty dangerous. But, you could have a retest of this breakout area. You could come all the way here before it breaks and goes down there. So what I would be looking for is if it, went here, put a, some kind of reversal, then I would understand where my risk is and where to get in. And then I have the dynamics of a trade. Whether I'm right or wrong, the market starts telling me an area where I could understand the risk reward. So this is a weekly chart, and it could be, a daily chart. So I'm simply trying to understand risk and reward relationships. And in here, it's a little bit jumbled, although I still think that this is going to go lower, but you have one of these, kind of random areas right now where it's just bouncing all over, and the bounces are somewhat random. So what I'm trying to do is take the randomness out of trading by saying, okay, first off, what is this? So you'll notice this is first off, it's a daily chart. It goes back at least to a year, to May of last year. So I've got a year's worth of looking here versus 5 minutes where it goes back, maybe 3 days. So what I'm trying to do is understand the major dimensions of this trade that is going to put me in the direction of taking, a major move out of here. I'm not trying to try and trade, $5 in and out 10 times a day, because you're just going to be carved up doing that. I'm trying to find where the markets are getting in a direction where I can take $50, $80, $100, $200 out of this market. So I got in last week at 844, and I had a very nice trade. It went to 740. I made $100 on this thing. Today it snapped back, and so I gave back some. But I was making $100 on this trade. So this is really what I'm looking for, is to make these big moves. Looking for where the market's going to set up for these major moves. And in order to do that, I need to understand, first off, what is the phase or the direction? So certainly on a short-term basis, the market has been trending lower. So once I understand, okay, it's in a downtrend, then I say, is there any pattern that's informing me as to where the next major direction is going to be? And to me, there's many different patterns. There's something called what's called an island top right here, where you can see that it's separated by a gap here and a gap there. So it kind of orphans these prices up here, and it's called an island top. And that was right at the top. And then you can also look at this as a double top, where you get these two tops right there. So you kind of have this double top up here. You have this mini head and shoulders right here. And then in this time frame, you have a double top and a head and shoulders here. And then in this time frame, you have a double top and a head and shoulders here. So collectively, all of these patterns tell me that people are getting out. This thing is starting to change hands from the big players to the smaller players, and they're going to be left with this steaming turd when it turns. And so once I kind of understand the patterns and what the patterns are telling me and what the trend is telling me, so everything is telling me this is going lower. But, notwithstanding that, we're in this area where there's, short-term support. So what I'll do is I'll wait for this, rally to extend to wherever it's going to go, give me an indication of when it's going to end, either a combination of, a reversal, an inside bar, so if I saw this, I would basically put every dollar I had in this trade. If I saw this, double top, these key reversals, I would basically sell it here, put my risk there, and I would put every dime I own into that trade. Because, to my mind, the combination of the patterns and price action, not only in this particular time frame, but based on everything that this chart is telling me. So the whole thing is to wait for an opportunity where the market tells you where the risk reward is. Right now, it's a bit arbitrary. It's trading at a support. Here's the resistance, and it could bang anywhere in between on a very random basis for several more weeks. And so all I'm going to be doing and looking for in this time frame is something where the market gives me a signal that it's ready to go lower. So, right here, there's, to me, a whole collection of this thing looks like a double top here. And so we could go a little bit higher, but I don't think that this is going to go too far before it runs out of steam. So by tomorrow, we should learn a lot more about where this market wants to go. And the conundrum is, I just showed you, you've got stocks like Zoom and Peloton and Roku and DocuSign. They're all down 80%. So could they have a 20% rally randomly? Absolutely. Could that be tomorrow because of some catalyst, whatever the Fed says? Yeah. So the whole thing is to wait for a time where you can identify trades in the market, where you can understand risk and reward. Ricardo says maybe this is an inverted head and shoulders. So this is where the markets throw you all kinds of patterns, Ricardo, and you've got to, say which is the real one. So to me, the combination of all of these tells me those are the dominant patterns. Now, here and here, it looks like, well, this could be a double bottom. You could make all kinds of patterns all the time. But first off, so Ricardo says this could be an inverted head and shoulders, where this would be the shoulder, the head. The problem with this is that you can see you've got all of these lower highs in here, right? So you can see all through here. Now you could come all the way back to 850 and it'd still be a lower high. In inverted head and shoulders, you should violate that and make new highs. But what you have here is like a leaking head and shoulders. So to me, that's not a head and shoulders. So the market gives you all kinds of looks, and then you got to figure out which is the look that's going to give you the next trade. And to me, these looks are telling me that that's going to be the next trade. So, but thanks for pointing that out, Ricardo. And this is the conundrum. The market, because the market will always throw you, looks and ways to, get you out of the trade, right? So, this was a long-term ascending pattern, and then you're saying, well, is this a double top, and on and on. And then this is a good example where maybe you say this is a double top, and so whatever you think it is, you want to have the market confirm what you're looking at. And in this case, the market gave you, like a one-day look that said, oh, maybe I'm on the right side, and then started going the other way. And so right in here, this price action started to bust the implications of that double top. So if you thought this was a double top in that time frame, the market was telling you that there was something wrong. Sometimes by the market not doing one thing, tells me exactly where it wants to go. So by not going lower, this tells me it's going higher. And that's very nuanced. I don't know how to explain a lot of this stuff. I've been looking at these charts for a long time, and sometimes I can just viscerally understand by something not happening means that something else is going to happen. So Howard puts it very well. A failed signal is still a signal. And so that's basically very correct. I think I showed you a trade last year where I made most of my money on a failed signal. And again, I never know how to kind of dig in the weeds on some of this stuff. I don't want to make it too overwhelming, but on the other hand, it's probably a timely. So it was, Beyond Meat is something that I've been bearish on for, probably years, because Beyond Meat actually flashed a sell signal in an earlier time frame, early in its history. So we saw this head and shoulders right here. And then we saw this double top right there. So right at this peak, I kind of said, this was over. Even when it was at 200 bucks, I said, this is going to be a $30 stock by virtue of this just enormous double top. So sometimes it's just as simple as that. Where, how would I know this thing had all these strategic mergers and all this hype, and it went straight down after that. But what happened was, at some point, it had this double top and this head and shoulders, and it all collectively shared this neckline. So up to this point, it all looked like, once it broke this neckline, my expectation was that what you see here is what I thought we were going to see there. That once we broke this neckline, then I thought, okay, it's lights out for this thing, and here we go. But what happened was, you can see we broke it and then put on this slight little double bottom. And then the minute I saw it poking above this neckline again, I go, there's something wrong here. All these warning signs started to flash. So to my mind, I start setting up a certain expectation that that's what should happen. And if it does the other thing, then, I reacted very quickly. And I actually, as bearish as I was, I got very long, probably put on one of the biggest positions where I bought the stock, I bought the call options. And in 3 days, this thing went from 120 to 160. And I made 7 figures in that flush. And so this is kind of an idea where, if something doesn't happen even in that time frame, it could do the other thing. But eventually it just went back corresponding to, what the major pattern was telling me. So again, I'm always looking for the governing pattern. And this, to me, this double top head and shoulders was going to govern or dictate how this thing was going to come out of here. And this is a great example where you see how the pattern dictates the next major direction. And all I'm looking to do is take a piece out of the middle of something like that. And if you can do this twice a year, even once a year, that's all you need out of trading. But what most people will do is try and, do 5 trades a day, in every one of these bars, and then end up losing all of their money between here and here. And then it keeps going. So, what I try and do is look at the big picture. What is governing or dictating this market? And this is a weekly chart. So this means that I'm looking at, several years worth of history to understand why it's going down here, why it's going down there, and why it's going to continue, going down. And, I've been saying this since last February, all the way back whenever last February was, right up here. Howard says, you explained the nuance well. Yeah, I do struggle, Howard. So thanks for, giving me some feedback here. VO says, anticipation of news is downsizing or closing position sound. So while I don't trade the news, I can anticipate that the news, is going to be, very volatile. And so it doesn't hurt to, close positions ahead of that, depending on, wherever you are. So yes, I think closing positions, because the volatility, could take this thing, it could make it look like a kid with a crayon tomorrow. But, to my mind, you can also create, independent of the news, risk reward relationships. So, I'm kind of looking at PayPal. I actually bought some PayPal here on the close because, man, it's just so oversold, and there's no definition for oversold, but you're in some kind of support area. And, I think that you could just play around with today's range and say, okay, I'm going to buy it here and risk till the low of yesterday. So it's literally a $4 risk between, I bought some here at 100.5. Today's low was 96. So I'm going to risk $4 and I probably could make $4 tomorrow. So to my mind, I will do small little things where, the risk reward, and that's really what it comes down to. If you can drill something down to a very small risk. So yes, this is a downtrend. This is not a classic double bottom, but I could see this being an area of support. I could be completely wrong. And if I lose my $4, so be it. And then you've got this inside bar today where literally the range today sits within the range here. And basically all of these are inside bars. So what I look at this is like a coil where you're just building. And what this says to me is that, this, has gone down, but now it can't go down anymore. It's just pushing. And so it's kind of like that beach ball, right? So if you put your hand on top of a beach ball and you push it underwater and you push it further, and then you take your hand off, what happens? The energy just, uncoils or uncorks. And so this is, to me, all of these inside bars represent energy. And the market's going to break down or up out of this energy pretty violently. And so I just bought it on the close here for fun. And, if I can make $10 out of this thing, so be it. You can get these counter trend rallies all the time, although this is not a classic example. I'm trying to find a trade where there's a setup where I can, kind of say with some kind of, like for instance, I shorted this trade today. And again, I don't know, I have certain misgivings about it. Not perfect, but I did short it. So when I look at this trade, I see this is the governing price pattern, the double top. It has a head and shoulders. So, this whole thing looks like a big topping thing. It looks like it hit a resistance here. We have a key reversal here, made a new high, close on the low. Then we had this little inside bar. And, I basically sold it. And now we had this kind of key reversal the other way, which implies maybe we kind of come back in here. I'll see what happens. But again, whether I'm right or wrong, what I'm trying to communicate here is just a way of looking at things to create these risk reward trades. Now, some of these may not be perfect. They may not work. I'm taking $2 risk here, $3 risk there. And if I lose it, so be it. Then I'll make, $100 on Tesla. And so I'm always probing the market, looking for that next move where I can, take a piece of the middle out of something like this. And so that's, what I'm doing on an ongoing basis. And this week it's very jumbled by virtue of, the chaos that's going on, as well as everything that preceded it, where everything is sold off. We're at these kind of support levels. And so it's going to be, again, this is where you can be pushed around. And this is where I really advise discipline and probably trading less and waiting for your setup. Don't go and, mix it up in the market because the market looks like there's all kind of action there and what have you. Wait until the market gives you a look that you can understand a risk and reward. I've been kind of looking at CrowdStrike. And CrowdStrike is something where, I would put, a sell stop under yesterday's low. So this is a way where you can kind of have your cake and eat it too, where you can put pending orders in there. And if they don't get hit, that's fine. Sometimes I love that where my order's not hit. So I would put a sell stop underneath all this. The way I look at CrowdStrike is, this to me looks like the major governing pattern. You have this funky head and shoulders. But, this is a thing where, it could start busting the implications of this. The weeklies actually look strong. It had strong earnings. And so right here, I look at this as a coil, just like, with PayPal, where you've got all of these inside bars and it's energy. Now, this energy could be looking to uncork to the upside. And I could be wrong, but I still think that this double top, these two key reversals, this is another top. And I feel like this thing is going to uncork to the downside. And so, again, you could just play with a risk-reward relationship where you could put a pending sell stop there, put your stop loss there, and limit your risk to that. And it could be one of these. Although, again, this is where I look at things on the daily and the weekly, where sometimes on the daily, it can look like one thing where you have this kind of downtrend head and shoulders. And then you flip to the weekly, and it's a very profound support level down here on the weekly, where you see all of these key reversals to the upside. So, when trades are a little bit ambiguous or ambivalent, probably better to stay away from them. But even on this trade, I still think that it could come lower. So again, I'm searching for a trade that, to my mind, really is something that you could sink your teeth into, and I'm not sure what that is. Maybe Whirlpool. So Ben says, can you explain why that's a coil? I don't know if you were talking about when I was talking about PayPal, but to me, a coil, what I look at is when I look at an inside bar, I just look at as a building or storing of energy, a coiling of energy. Let me see if I can see one here. So this is PayPal. And so again, what I try and do, whether the thing's in an uptrend or a downtrend, is just join whatever the phase or the direction. So when the market is going higher in this thing, I'm looking for my key reversals. I'm looking for, so here's an inside bar there. You can see that range, and this is a weekly chart. So you can see that even you had two coils. You can see both this week and that week, both those bars sat within the range of the previous week. So you can see that both of these bars were just storing energy. And then we're going to uncork in the direction, of the trend. So I just look at these inside bars agnostically, right? To me, they just represent a storing of energy. And then I'm always looking for that storing of energy to release in the direction indicated. So in this case, we had a previous uptrend leading there. And then you had this week, which was a key reversal, made a new high, close on the low. And then you had these two bars that were just basically building energy. And then that energy just uncorked to the upside. And so I look at these coils as a storing of energy. Now, once this thing came up here and then made a bear pattern, now, we understood that this thing was going to get thrown in reverse. Then I look for, the coils. I look for these small little narrow bars where, they're just storing energy to uncork in the direction as indicated by the pattern in the trend. Here was a very small inside weak bar. And typically those things look very benign. They look very innocent, but to me, they indicate a change in, or a very profound release of energy. And actually, just like currently, this whole thing was really a coil. These are all kind of inside weak bars. So all of these bars in here, all of those weekly bars really sat within the range of that bar. So this was all just like an inside weak coil. It was just building and building and building this energy to release in the direction as indicated by the pattern and the direction. And you can see it just uncoiled. And so now I'm looking at this kind of coil on the daily and saying, We've been trying to go down for 5 days now. 1, 2, 3, 4, 5. So you've had 5 days where you can't go lower. So, I'm surmising that you could get just this pop. Now, it may not be a sustainable thing, but, if I can make a quick, $10 to risk 4, then that's really all I'm looking for on this trade. I'm not looking for this to be in this as a long-term player. I just kind of, playing around, frankly. It's not a perfect trade. It's just something I'm doing personally, where I just kind of look at this as a coil, a storing of energy, and I'm just playing around with the risk reward, saying that, I'm just going to risk till the low of today's range and, see what happens tomorrow. I don't really see it kind of getting above there. So I don't really see a huge pop here. But, if I can just take a quick, $4 or $5, I'll take it. And this could, come out to be more. But so I'm sorry, I'm looking for trades right now, and it's just a combination of these things being oversold, and this is Netflix. Looks terrible on the long term, but short term we could have a short-term pop here. Facebook. Anyhow, I've gone pretty long here. So here's Facebook, where they've tried to take this thing lower, 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 and you may get a pop. But again, I wouldn't trust this as a bottom either. So these are not good examples. Do you use any technical indicator? I just look at a picture like you're seeing now. There are no leading indicators. There's no volume. There's no MACD. There's nothing on this chart. I just look for a picture to tell me. And this is still a very profound downtrend. And I don't see anything really changing that. I'm sorry. I'm just searching my brain to find something that, so in a way, Caterpillar looked like something that, could be a bullish example. But it, could also be a bit of a trap here. So I saw this double bottom down here. I actually told a friend of mine to buy it right down here. I took this for a nice ride up here. And so let me just see. Hard to tell. It's already pretty. So I'm just searching for examples, and right now I think the market is just really muddy and really prone to be jerked around quite a bit. And I'm trying to find something with a risk reward that no matter what they do tomorrow, I can understand that. Bought Bank of America a couple days ago, BAC, and that doesn't look too bad. So what really struck me about Bank of America was, and I made a whole bunch of money on the options. Sometimes just the symmetry, how things line up, where if you connect all of these lows, how they just line up perfectly. So it just really struck me, the intersect of how elegantly this thing came back down here. And then to my mind, there was a small, just like Tesla on the upside. This to me, when it closed right there, I kind of viewed that as a double bottom right on this intersect of this line. So on the close there, I remember I bought it at like 38.52. And then I bought the call options, and you can see that the next day it just jumped higher. So, it's all about finding these things, finding some timing. And so I do think that now this represents like another coil, another consolidation, where you kind of gapped up, and then tomorrow you could gap up again. You're probably likely to. And so this represents a coil. This is like a mini reversal here, where it made a new low during the day, closed on the high. And I would basically put a buy stop on this thing above today's high, put your stop loss there, so you create this risk reward, and this thing could continue popping higher. So I'm not finding anything that's that glamorous, but when I find certain things like this, the risk reward is so favorable, where I bought this literally at 38.5. And so in my mind, I was creating a trade where I was literally going to risk $2. I didn't think it was going to take out this low right away. I figured it would give me a look where I could kind of stay in this trade and weigh it out. And I made like over double my money just in the options the next day. So, I just look for these risk reward relationships all the time. And, when you look at this, you see this gigantic double top here. And so, and then you see the key reversal that starts it off, made a new high, close on the low. So if you think that there's a top here, then I will start playing around with the risk reward dynamics where I'll put my sell stop there. I'll put my stop loss there. And, that's the kind of trade you can get. But, once this thing gets going, then the dynamics of, where do you short or what's the take profit? What's the stop loss changes. So what I try and do is try and find these areas where the risk reward is so favorable, where I can literally get into these trades, put my risk here, create a very small risk for a very big outcome. And this is what I'm trying to do all the time. And so, once the thing starts going, then it becomes more and more difficult to do. Yes, you've got some inside bars here, and you could have shorted it under here, and you get this push, but then it's right back. It's not as favorable as you catch this thing coming right out of the chute. So I try and get the horse right as it's coming out of the barn or the gate or whatever the metaphor is. And so once these things start going, then it becomes, the dynamics start shifting. But I do think that this thing looks like it's, it's kind of this funky reverse symmetrical triangle thing. And, you're likely to keep getting a pop, higher into this thing. So I think the risk reward is still pretty good. But it's a funky pattern here. I'm not as absolutely positive as I was when I got in down here. So Natalia says, wow, it was a huge double top. Yeah. Well, okay, so this is where, the market tells you, okay, it's a top. And now you look, does the market action correspond with what that top is telling you? Or does it start busting, within the context of this reverse thing? If it starts, keep going higher, then it's going to start busting the implications of this top, which frankly, I expect it probably to do. So these things are very fluid. These patterns show you something, you get in them, and then they show you something else. And so this is the constant balancing of the short, the medium, the long term, and what have you. And again, it's just finding, so actually even on the long term, this looks pretty bad, where you can see the double top right on this long-term weekly. And then, if I think a pattern's confirming, I also look at the price action. So you can see this made a new high, close on the low right at that top. And then when it made that new top again, made a new high. And so this is kind of a go to the bank trade, where if I can see these two intersects in the same area here, and then the same price action, look at that corresponding move. And so this is what I'm looking for all the time. And it may not reveal itself. And this is why this is a weekly chart, right? So you may have to wait weeks and weeks or maybe months and months for that trade to reveal itself. But what most people are doing is trading in and out 5 times a day and destroying themselves. And then I'm looking for one trade where I can, get short at 50 and take it down to 38. And, that's where you make all of your money. So now the question is, is this thing, double top? Is it looking like it's going to form a head and shoulders, or is, it just going to go back into the uptrend that this really is? So this is where you see these supports, where you see this key reversal right at the support area where it made a new low, close at the high, and then you don't want to short it anymore when you start getting into these areas. And this is kind of where the stock market is now, where it's gone down into these low areas, and this is where you're susceptible to these bounces. So this is just a long way of saying I just constantly am looking for risk reward relationships. And it's, always dynamically shifting. And my best trades are where I have a couple of bucks risk and I can make $10, $20, $50 on that trade. And that's what I'm looking to do. I'm not looking to trade, every hour and try and get 50 cents here and $2 there. And that's just a losing game. So with that said, I'm going to leave you guys there. I'll see you tomorrow, 4:30 Eastern Standard Time. Sorry if I'm a little bit, all over the place today. I'm trying to communicate, I guess, a lot of messages at the same time. And, hopefully some of this makes sense. But you guys starting to see, does this make sense to you? Does this resonate where if you look at something on a bigger picture where you can see patterns and price action and trends, that it could make a difference in your trading? So let's see. Sal says, my lens has shifted. John says, very understanding. Julie says, yes. So again, Yesser says, yes, but not as easy as John, thank you. Baron, thank you. Kim says, very helpful. Eddie says yes. Pierre says yes for sure. Mark says absolutely. Giancarlo says much better picture on a bigger picture. You need to be patient. And yeah, so to me, it's that old saying, a picture is worth 1,000 words, right? And the bigger the lens you have, the more global the picture you have, then you can start making sense. You can start seeing the forest for the trees. And it's very different where most people are trading on a 15-minute chart and they're only seeing a microcosm of what's going on in here. And that looks very different. So you're seeing double bottoms and double tops, on a 15-minute chart. And if you don't see the big picture, then you're missing the bigger moves. Jaron Collis has been trying to trade on a 1-minute chart and been getting wrecked. Well, there's no wonder. And, again, the reason why I'm looking to trade on these bigger time frames is because I'm looking to take the bigger pieces out of the market. So, if I see a bottom, I'm just trying to take a piece of the middle out of these moves. That's what I'm trying to do. Where if I understand, a top's been put in and there's a change of direction, I'm just trying to find ways to, surrender to the will of the market in that particular space. Vicky says, any chance of seeing recordings of previous webinars? You can call our support team if you want to see yesterday's. I don't know about previous. I've got tons of videos on YouTube. And you can learn just a lot from those, frankly. Duncan says the boiler room is great. That is our morning session where I look at the markets before the market and look at arbitrage opportunities, and they really present themselves. So I will see you tomorrow. Thanks very much. And sorry if I was not so clear today.
All right. See you tomorrow, Mark.